G'day folks, welcome back to another review of Bitcoin. And Bitcoin's still in a bearish mode and it continues its trend to the downward trajectory. Before we go any further, make sure you hit that like and subscribe button to support the channel. In terms of the outlook, as of today, February 3rd, Bitcoin is trading at approximately 94,549, reflecting a recent decline influenced by global economic tensions, notably the US imposing tariffs on Mexico, Canada and China, which has heightened market volatility and reduced investor appetite for riskier assets like cryptocurrencies. Despite this downturn, Bitcoin's long-term outlook remains optimistic, bolstered by increasing institutional adoption such as MicroStrategy's substantial holdings and a Czech National Bank's consideration of Bitcoin for reserve diversification. Analysts suggest that while short-term corrections are possible, the overall trajectory for Bitcoin in 2025 points toward growth, with projections of significant price appreciation as the market matures and broader acceptance continues. So looking at the charts, we always look at the long-term trends first. For those new to the channel, we'll look at the monthly, the weekly and the daily. And on the monthly, you can see there, since around about November 2024, on the CCI, we've had a nice bullish break. The price has been bullish now since October 23, although we always look at the CCI in terms of weakness. You can see there it consolidated, dropped off a bit, and you would have, if you're going monthly long positions, you would have closed it out near the top there and then reopened it once it broke above that CCI again on that candle. So that's how we trade it basically. But in terms of trend, we look at the monthly in relation to the weekly. And the weekly, you can see there, again, it has been showing predominantly bullish moves, with the exception of this consolidation and slight drop during that period between around about early April 2024, and it finally broke higher than those moving averages on both the price and the CCI around September 2024. And more recently, it's consolidated again. We've had this bearish divergence on the weekly, lower highs on the CCI versus higher highs on the price, and that's actually broken to the downside, giving us a bearish outlook. Even though the price looks to be consolidating up there, the CCI has dropped, and that's causing a bit of weakness in the price. On the daily, so if you're trading on the daily, you look at the weekly as a reference, and we're taking only short trades. At the moment, you can see here on the daily, it's had a separate divergence, lower highs on the CCI versus higher highs on the price. Broke down, hit our minimum target range, and that minimum target range is identified by the Fibonacci retrace, the 23-38% level. Sort of fluctuated in that range, it bounced off a bit, hit that resistance again at 108.263, and then dropped further since then. And since then on the daily, it's still dropping in a bearish momentum. Now, if we go to the intraday charts, we always look at the intraday charts in relation to the daily, so we only take short positions based on the daily. So you can see there, the more recent trade we would have taken would have been back there when the CCI broke below the moving average band. And going back to here for a moment, you can see there when a price broke below the price band, but also the CCI broke below the moving averages, you would have taken your first position there, and you would have closed it out when that CCI broke into that moving average range. So that would give you a small gain of about 0.33% in 8 hours of trade. You would have avoided going short or long during this period, even though they break to the long side, when we're still going short in direction of the daily, and you would have taken another short trade from there. And a couple of things here, you could have if you were a bit had an iron gut, you could have probably held it, but it's a bit risky. I like to take profits when the CCI breaks into the moving average range, like there. And that would have given you another short little, small little trade there of 0.4% gain in 6 hours of trade. Short again there, and close it out again on that arrow, on that candle, and then go short again there, and then close it out again on that candle. And more recently, short again on that one, and you would have been nicely done on that one, and coming close to closing it out, and you would have made 4.19%. So little incremental gains there. Again, you could have kept it along when it's below the moving averages of the price band, but sometimes these, when it moves higher, they're pretty strong retraces and you can actually lose a lot more profitability. In this case, we actually had small gains along that period. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.